Hello everyone, a very good morning. Welcome to Oliveboard. I am Anshul, your JAIIB mentor, and today we are here for a very important session. We are going to discuss the previous year questions from the October 2024 exam cycle. So this session is a must watch before your exam because here you'll get an idea as to which type of questions were asked in the previous exam cycle and the topics that were asked. Now, although we do not have the exact access to the question paper, but these questions are memory based. The aspirants who have given the exam in the previous cycle, they have conveyed to us the topics that were asked. Based on those topics, I have created these questions. So these are not the exact questions that were asked, but the exact topics that were asked. And from that topic, the probable type of questions which which you can expect to see in your May 2025 exam for the RBWM paper. So this session is very important. You'll get an idea of the difficulty level, the types of questions that are asked, and also how you can prepare better for your exam. So before we start, make sure that you like the session, you share it with your other fellow aspirants, and till the end, be with me because all of these topics are very important. Right, so let us start the RBWM previous year 2024 October exam cycle question discussion. So you will see questions on your screen, then I will give you 15 to 20 seconds to think about the right answer, and then you will comment down below the correct answer. We will also discuss the answers in this session itself. So let us start. All right, so here's the first question. The question says pick the statements that correctly describe the meaning of retail banking. This is from your retail banking and introduction. Retail banking begins with target clientele, which is the common masses. Retail banking begins with a stage which can be called as class retail banking. Retail banking is the stage, the class retail banking is the stage in which the bank provides standardized banking products and services. And fourth statement, retail banking focused solely at the niche customer segment may also be termed as private banking. So there are some terms which are asked by the institute in every exam cycle, like mass retail banking, class retail banking, private banking. These are some repeated questions. And on the basis of that, I have prepared this multiple selection type question. So out of these four statements, you need to select which are correct. Option A says 1, 2, and 4. B says 2 and 3. C 1 and 4. D all of the above statements are correct. So what is the correct answer? Your 10 seconds start now. Right. So as we have discussed earlier also, retail banking is the provision of banking products and services to the individual customers. But in retail banking also we have two segments. We have the mass retail banking and we have the class retail banking. First stage is the mass retail banking and second stage is the class retail banking. In class retail banking, more personalized or customized products and services are provided. And the niche customer segment is known as the high net worth individual. So when we are focusing on the large customer group, then it is the mass retail banking. And out of that large customer group, when we are providing services to the high net worth individuals, then we are in the second stage, which is known as class retail banking. So accordingly, the correct answer will be option C, that is 1 and 4. Retail banking starts with the target clientele, which is the common masses, and retail banking that is focused solely at a niche customer segment may be termed as private banking. All of the terms discussed here are very important, right? So retail banking starts with the mass retail banking stage. And class retail banking is the stage in which the bank provides standardized? No. In class retail banking, we get customized and tailor made services. Tailor made services. Right? So the correct answer is option C. Next question. The mass retail banking is the stage in which the bank provides dash banking products and services. Which type of banking products and services are offered in the mass retail banking? This question has also been asked in the previous exam cycle, right? So retail banking provides services including savings and current account and mortgages, personal loans, providing only to the individuals in the general public, right? So these are the characteristics of retail banking. And we have already discussed the class retail banking and mass retail banking stages. In the class retail banking, we have established that customized and tailor-made products are given to the customers. And in the mass retail banking, we provide standardized services. That is, services or the products that have more or less the same quality is provided to all the customers, right? To all the customers. In the mass retail banking, bank provides standardized products and services. They attempt to build a sufficiently broad customer base which can serve as a stable source of funding. So the correct answer is option B. A broad customer base. Then this broad customer base will be divided into various segments like the affluent class, mass market, super affluent, high net worth individuals, super HNWI, and then they will be provided customized products catering to the unique customer segment. Then, third question. When in an organization, autonomous divisions small enough to be flexible and large enough to exercise control over most of the factors affecting its long-term performance are created, such an approach is known as. So, this is the business approach. The business models that are adopted by the different banks. The private banks, public banks, foreign banks, they adopt different business models. So we have three approaches. We have the SBU, the departmental approach, and the integrated approach. So out of these, you can automatically simply rule out the option C. Functional approach is not one. Three approaches are there. Then the question asks us autonomous divisions affecting the long-term performance. So here we are referring to which type of business model. Comment down your answers. Option A is SBU, option B is departmental approach, option C is functional approach, and option D, integrated approach. So if we are talking about the strategic business units, this approach is mostly followed by the private sector banks because they have a clear focus on the business objectives. In foreign banks also, SBU is the business model which is used. So, SBU as a business model creates independent autonomous divisions. So, the correct answer will be option A. Independent autonomous divisions which act as profit units, business units. And then if we talk about the departmental approach, so rather than dividing on the business lines, the organization is divided on the basis of functions that the various teams perform. So various functions are there: accounting, marketing, finance, planning, and each department will have its own manager and chain of command. And this type of approach is mostly followed by the public sector banks. The departmental approach is followed by the public sector banks. And then we have the third approach, which is integrated, that is usually adopted by the smaller businesses. smaller businesses. So, along with the questions and answers, we are also discussing these topics. So, make sure that you revise them accurately. Then, next question. Which of the following statements about the difference between retail banking and corporate banking is not correct? First thing, the difference between the two is important. Every time questions are asked from the difference between the retail banking and corporate banking, and here the question is asking us not correct. So read the question carefully, because if you do not and you just move on with answering the question, you might skip this part. So, which is not correct? Retail banking targets at individual segment while corporate banking deals mainly with the corporate clients. This is correct. Then retail banking is a mass market banking model, whereas wholesale banking is a relatively smaller segment. This also we have seen. Retail banking is a business to business approach, whereas corporate banking is a business to customer approach. And the ticket size of loans in retail banking is low, whereas the ticket size is high. So the amount or the quantum of loan given in retail banking is low, and the quantum of loan given in corporate loans is high. This is also correct. The question is asking us which is incorrect. So option C. Retail banking is actually a business to customer approach. Banking business to the individual customers, and corporate banking is from business to other corporates. All right. So the difference between retail banking and corporate banking is important. Correct answer option C. Next. If the owners want to earn a greater return, they would rather use dash than dash, because this greatly increases their return. Question in the previous session we can also find from the topic of branch profitability. So from the branch profitability, we have certain important topics like what is the gross profit, operating profit, net profit, then the concept of ROE and ROA, return on equity and return on assets. What is the leverage ratio? How do we calculate the average bank assets? How do we calculate the total assets or liabilities? All of these topics are important. What is the difference between profit and profitability is also important. So here, if the owners want to earn a greater return, they would rather use equity than its own capital. So in the first blank, we have equity, and in the second blank, we have the own capital. Why? Because here we are talking about the leverage ratio. The leverage ratio. What do we mean by the leverage ratio? It is the leverage ratio is the bank asset by the bank divided by the bank capital. All right. So we are here talking about the return on equity, because the bank's owners are primarily interested in. If they want to purchase more assets, they have to pay for it either by more liabilities or with bank capital. And if they use more bank capital, then even a small decline in the leverage or even a small decline in the value of assets will wipe out its total capital. So the banks would rather use their own equity than the bank capital. I hope this is clear. Option A. Next, select the correct statements for the maturity stage. So here we are talking about the product development process, the product life cycle. The product, when it is introduced in the market, it goes through four cycles or four stages. We have the introduction stage, the growth stage, maturity stage, and the decline stage. So four stages are there. The question asks us about the maturity stage, which is the third stage. So which statements are correct about the maturity stage? Statement 1, the sales volume of the product picks up and the product is likely to break even and start generating profits for the organization. There's a wide customer base which will result in maximization of sales with inflow of business and profit. Here, the business and the profit stagnate and the customer develop a tendency of indifference. So, the characteristics of each of the stages are very important. Product development process from Unit B is a very important chapter, and definitely you will be asked 2 to 3 questions from this unit. All right. So, maturity stage, the third stage. What are its characteristics? Comment down your answers. So, yes, the correct answer will be option B, that is only two. Only two. The first statement is the characteristic of the second stage, which is the growth stage. And third statement is the characteristic of the fourth stage, which is the stage of decline. Not 2 and 3, but the correct answer will be B, only 2. Let us discuss the stages. So, in the first stage, which is the growth stage, which is the introduction stage, the sales volume will be low. Revenue will not be enough to cover the cost of producing, marketing, and servicing it. Then, in the growth stage, the product is likely to break even, start generating profit. The sales volume will increase. Then the third stage where there is more growth and sales volume peak. So there's a maximization of sale. And finally, what will happen? The fourth stage, which is the staleness stage or the saturation. Here the business and the profits stagnate. And this stage, if not managed correctly, will lead to the death stage or the decline stage. All right, so in the fourth stage, what happens? The product becomes less attractive. And if the stage is not properly attended, it will lead to product death. So only the second statement is a characteristic of the maturity stage. All right. Next question. Select the correct statements or select the statements that are correct about a credit score. Credit scoring is also a very important topic. What is a credit score, or how the CICs work, how they calculate the credit score, what is the which score is considered a good credit score, which activities lead to a bad credit score. All of these topics are important. So the first statement, RBI has made it mandatory for all the credit information companies to give a free full credit report once a calendar year to individual whose credit history is available. This rule has come into force from 1st January 2019. Credit score values range from 300 to 700. A credit score is the statistical analysis of a person's past credit dealings. Comment down your answer. Option A says 1 and 4, B 2 and 3, C 2, 3 and 4, and D all are correct. Which of the following statements are correct about the credit scoring? So, yes, the correct answer is option A, that is 1 and 4. RBI has made it compulsory that the CICs will give a FFCR without any charge. Another important point is without any charge, that is free of any charge provided to its members. But this rule has not come into force from 1st January 2019, but from 1st January 2017. Then the credit score value ranges not from 300 to 700, but from 300 to 900. A score above 700 is considered good. And finally, the credit score is the statistical analysis of a person's past credit dealings. All right. So it is a 3-digit number representing the amount of risk. CIC will be based the CIC will base the scores on the defaults of the customers on the previous credit transactions, their payment behavior, and the previous searches. All right, how can you manage a good credit score? You should know how old your lines of credit are, how many past accounts are due, then how are you utilizing the credit? Are you a safe customer or you are over leveraging yourself? All right, so these points are important. Next, which of the following protocols should be adhered to when an illiterate person opens a savings bank account? Affixing their thumb impression on the account opening form in the presence of an approved witness, lodging a recent attested photograph with the bank, mandatory usage of checkbooks for transactions, making withdrawals through written requests. So now we are talking about the important retail liability products when we are opening the account for an illiterate person. So account opening requirements for a minor is important, for illiterates, for blind persons, for visually challenged persons, the handicapped, old or sick persons. All of these things are there. For the illiterate persons, which guidelines are correct? They can open the account by fixing their thumb impression. They have to provide a recent attested photograph. However, checkbook facility is not given and withdrawals through written requests is also not there. So the correct answer will be option A, that is 1 and 2. 1 and 2. All right. So savings bank account of individuals who are otherwise capable of entering into a valid contract, that is they are not of minor age and they are of sound mind, right? They must be, if they're unable to write, they should attend in person and affix their thumb impression. They will lodge their recent photograph with the bank, right? Name of the account holder, nature of the account number must be written in bold letters. No checkbook facility should be extended in account of an illiterate person. All right. And when we are talking about withdrawals, then the illiterate person should themselves come to the branch personally and affix her or his thumb impression in the presence of an officer. So a written request is not accepted. So the correct answer is option A, 1 and 2 only. Next, what are the responsibilities of retail loan processing centers? So when the banks they provide loans, yes, witness is must. That is why we said in the presence of a officer. In the presence of an officer, the thumb impression will be affixed. All right. Now let us answer this question. We have two types of models for processing of retail loans. We have the standalone model and we have the RLPC, in which the different branches they are attached to a single retail hub or retail factory. So what are the responsibilities of the RLPCs after receiving an application? Conducting the verification checks, calculating the applicant's credit score, pricing the loan based on various factors, direct marketing to potential customers. Answer this question. Which statements are correct about the retail loan processing centers? So this is the centralized model for the retail loan processing, where the RLPCs are known as the retail loan factory, hub, RLPC, RAPC, or the retail loan branches. So here the correct answer will be option A, correct, 1, 2, and 3. 1, 2, and 3. So what is happening here? There's a centralized processing center, the various branches which are attached to it. These branches will market the product and they will get the application with the preliminary documentation, and they will forward it to the RLPC, right? So the branches will market and the various retail asset products. The business sourced will be forwarded to the retail centers. They will process the application, do the verification check, arrive at the credit score. Yes, exactly. They will do the valuation and release the loan to the borrower. All right. So the correct answer is option A, 1, 2, and 3. Next question. A contactless card is a faster way to pay with credit card for the purchases under dash at a participating store. When we are talking about a contactless cards, what is the limit under a contactless card? Whether it is rupees 1000, rupees 5000, rupees 7000, or 10,000. So yes, the correct answer will be option B, rupees 5000. So what happens in a contactless card? Instead of dipping the card at the billing counter, we can simply wave or tap the card, and without entering a pin for the amount under rupees 5000, it will work. Another question that was asked in the October cycle was, the contactless cards work on which technology? So can you answer, the contactless cards work on which technology? What is the name of the technology? The technology that the contactless cards work on is known as the NFC. It is known as the near field technology, right? So it employs the radio transmission to ascertain the contact when the cards are tapped or waved near a terminal. All right. So the transaction is capped at rupees 5000. Next, correct answer is option B. Which technology process offers some modulation within a product oriented feedback? So we have the process models. On a scale, we have the horizontally organized, vertically organized, predominantly horizontal, and predominantly vertical. And this process model is based on the level of customer information integration. Whether there's a centralized customer database or a separate end-to-end processing is there for each of the product, will determine whether the banks are following the horizontal model or the vertical model. And then in between these two extremes, we have the predominantly horizontal and predominantly vertical. So the horizontal organized, where there is product orientation, that is customer information sharing is not there, and in the vertically organized model, there is a centralized customer database. In between the two, predominantly horizontal and predominantly vertical is there. Yes. So the question is asking us, it offers some modularization within a product oriented feedback. So this type of model is known as the predominantly horizontally organized model. The predominantly horizontally organized model, where for most of the product there is end-to-end processing, it is product oriented, and for some of the products the centralized customer database will be there. All right, so option B is the correct answer. Next, The IDRBT started functioning from March 6, 1996. Committee under whose chairmanship recommended the establishment of the same. So, which committee recommended, or committee under the chairmanship of who of the following recommended the setting up of the IDRBT? Option A R.K. Jha, option B W.S. Saraf, option C Rangarajan, or option D V.S. Verma. Yes, so IDRBT is the Institute for Development and Research on Banking Technologies, and it was created for leveraging the information technology, right? And the committee that was constituted by RBI was the technology upgradation in the payment system in the year 1994 under the chairmanship of W.S. Saraf. Not C, the correct answer is option B, W.S. Saraf. All right. The recommendations were given. The report was submitted in 1994 and IDRBT started functioning from March 6, 1996. Now you tell me which technologies were launched by IDRBT over the years. Which technologies have been launched by IDRBT? The technologies launched by IDRBT are the Infinet, we have the SFMS, then we have the National Financial Switch, and finally we have the IBCC, right? All of these technologies were working in their areas, but later on they have been transferred to other institutes because IDBRT's main role was research. So the IFTAS, which was created, has taken over the Infinet. SFMS and IBCC has also been taken over by IFTAS, right? And IFTAS has been acquired by Reserve Bank of India. IFTAS, which is the Indian Financial Technology and Allied Services, was created to oversee the functions of these four technologies so that IDRBT can continue or focus on the research. It has been taken over by RBI. So we will remember the name of the committee and the chairperson, W.S. Saraf, who recommended the IDRBT. All right, next question. A substandard asset is one which has remained non-performing for a period. So now we are talking about the NPAs. We have the special mention account, we have the substandard asset, doubtful asset. Basically, we are talking about the monitoring of the loan account. So a substandard asset is one which has remained NPA for a period of before an asset comes in the substandard asset, it will be in the special mention account. I hope you remember these categories we have already discussed. No, option B is incorrect. Yes. So let us discuss these SMA. We have the SMA 0 category, we have the SMA 1 category, and SMA 2 category. Special mention account where the principal or the interest has remained overdue for 1 to 30 days, then beyond 30 days to 60 days in the first category, and from 60 to 90 days in the SMA 2 category. Then beyond the SMA 2 category, if a substandard asset remains NPA for a period less than or equal to 12 months. So, for a period less than or equal to 12 months will be categorized as a substandard asset, right? And beyond that, what will happen if it continues as an NPA for more than 12 months? What will happen then? How are we going to categorize the asset? So an asset is required to be classified as what if it has remained NPA for more than 12 months? Yes, it will now enter into the doubtful category. In the doubtful category also we have three categories. The doubtful category 1, 2 and 3 for 1 year, 12 months, that is 12 months in the first category. So we will write this down here. 12 months in the first category, beyond 12 months to 3 years in the doubtful category 2, and more than 3 years in the doubtful category 3. This topic is very important, right? Also, along with it, the provisioning requirement for each of the type of assets. So the correct answer here is option A. A substandard asset has remained NPA for a period less than or equal to 12 months. Yes, beyond the third doubtful category, more than 3 years, it will be under the loss category. It will be under the loss category. All right. Next question is regarding securitization. So, securitization follows a two-step process, and the question is asking us about what happens in the first stage. In the first stage, there's a sale of single asset or pooling, sale of pool of assets to a SPV in return for an immediate cash payment, repackaging and selling the security interests, incoming cash flows from the asset or pool of assets to the third party investors. So, when we are talking about securitization, so what is the meaning of securitization? By which a single performing asset or a pool of performing assets are sold to a bankruptcy remote SPV, the special purpose vehicle. What is a special purpose vehicle? It can be any trust or any entity or any company for the specific purpose, for accomplishing the purpose of the company, for taking on the securitization. Then we have other terminologies like originator, the sponsor, obliger, and securitization is a two-step process. So the correct answer here will be in the first stage. The sale is there of a single asset or a pool of asset to the SPV in return of an immediate payment. So what is happening here? There's a sale of the single asset to the SPV, and in the second stage, the SPV repackages the assets, creates the security receipts, and let the third party investors invest in the security receipts. All right. So that is the securitization process. So securitization is important. SARFAESI Act is very, very important. I will say it is the most important topic from your module B. SARFAESI Act and securitization. Apart from the SARFAESI Act, the recovery of retail loans, the working of the Lok Adalat, the Debt Recovery Tribunal, the whole of SARFAESI Act, enforcement of security interest. Definitely, you will get many questions from these two chapters. All right, provisioning norms, recovery policy of the banks. What is the meaning of a willful default? What is the meaning of a genuine default? What are the measures taken against the willful defaulters? Just a second. Yes. All right, so I hope this is clear. Next question. The code of bankers' commitment to the customers was released by. The code of bankers' customers So here we are talking about the service standards for retail banking in which the BCSBI was created. The Bankers Code of Commitment, the Banking Codes and Standards Board of India, BCSBI, which released two codes. First for the customers, individual customers, and second for the micro and small enterprises. So the question is asking us that the code of bank's commitment to the customers was released by which committee recommended the code of banks commitment to the customers. No, it is not SS Tarpore. We are here referring to the YV Reddy Committee. The Code of Banks Commitment to Customers was released by Dr. YV Reddy. When? In 1st July 2006. Don't get confused here. The BCSBI was created by the recommendation of SS Tarpore Committee. SS Tarpore Committee recommended the creation of the BCSBI. The board, the board was created on the recommendation. But the bankers code for commitment to the customers was released by the YV Reddy. Yes, all right. So let us just get through this. In 2003, RBI had constituted a committee on the the procedure and performance audit of public services. This committee, created in 2003, was under the chairmanship of Shri S.S. Tarpore. The committee created in 2003. Then the committee recommended setting up of the BCSBI, the Banking Codes and Standard Board of India. All right, it was created in 2006. But the question is asking us the Code of Banks commitment to the customers was released by. The Code of Banks commitment to the customers was released by which person out of the four options? So this was released by Dr. YV Reddy. Don't get confused. Dr. YV Reddy, who was the then governor of RBI, in 2006 released the Code of Banks Commitment to Customers. Now, is it clear? Is it clear now? Yes? All right. So, BCSBI by SS Tarpore Committee, YV Reddy released the Bank's Code of Commitment to the customers. Then in the year 2008, the Bank's Code of Commitment to the micro and small enterprises was released. When? In the year 2008. All right. So I hope this is clear. Next, under which type of portfolio management services the portfolio manager is given complete control of the portfolio and is free to adopt any strategy. So when we are talking about the portfolio management services, what is happening here? The customers or the clients, they give the access of their wealth that they already own for proper management of the wealth or the assets that they own so that the portfolio managers can invest and reinvest. Then we have four types of portfolio management services. In which type of portfolio management services do we give the full control to our portfolio manager? Is it the active portfolio management, passive portfolio management, non-discretionary or discretionary portfolio management? What is the correct answer? D. Yes. The correct answer is option D. Discretionary means complete control on my discretion. On my discretion. So active portfolio is what? Where the portfolio manager they aim to beat the performance of a market index. We are trying to do better than a market index. Any market index like Nifty can be selected, but again, they are involving in quite high risk. They are actively buying and selling securities. That is active. Passive portfolio management, what the manager tries to do, they are trying to mimic the position. They will try to mimic an index. They will invest in the same securities with the similar weights. So it is rather passive. Variance will be low and the risk will also be less. Then we have the non-discretionary, where the portfolio manager will only give me advice. So if I'm a client of the portfolio manager, the manager will listen to my objectives, my queries, then they will give me an advice. Final decision will be the client's. And then we have the discretionary portfolio management, in which the complete control is given to the manager and they are free to adopt any strategy. And obviously, if complete function is performed by the manager, so they will also demand a higher fees. All right, so better than the index, active, mimic the index, passive, do anything that you want, do anything that the manager wants, discretionary, and only advisory services, non-discretionary. So portfolio management is also important. What are the steps in portfolio management and how does it work? What are the benefits, advantages, disadvantages? All of these things are important. Active and passive, please repeat. All right. Basically, what happens in the active portfolio management? The portfolio manager, they are trying to beat the performance of a market index. Any market index the portfolio manager can select, and whatever buying and selling is happening in the market index, they will just mimic it. They will buy the same securities, they will sell the same securities, or they will actively buy and sell the securities to create more returns than the index. So we are trying to do better. That is active. And in the passive portfolio management, we are trying to mimic the performance of an index. So the way the index is functioning or performing, the manager will also invest in the same securities with the similar weights. All right. It is also known as indexing or index investing. Okay. So better than the index is active, mimicking the index or similar to the index is passive. That is active and passive portfolio management. Okay. So now answer this question. What is the difference between investment management and investment banking? Investment management and investment banking. All right. Right. So we are given the statements. Clients of investment managers include individuals only. Investment bankers help with the corporate finance needs, such as raising funds or capital. Investment management firms are also the market makers. Let me tell you the difference between. There are two types of clients. One type of clients that already have surplus funds, they have surplus wealth in hand, and they want better management. Right? If I already own 50 lakh rupees and I want some professional advices, that is one category of client. Another category of client is who do not have funds. They are deficit. They need funds. and they want to raise capital. So they want professional advisory services for raising capital. All right. So one type is known as investment management, another type is known as investment banking. And the difference between the two is option B, that is two only. Not one, two, and three, but two only. The clients of investment managers include only individual investors, not necessary. Even corporate investors, trusts, associations, they can also be clients of investment managers, right? So, clients of investment managers can be individual as well as institutional investors. So, first statement is incorrect. Second statement, investment bankers help the corporate finance needs such as raising funds or capital. So, they provide debt issuance, new securities underwriting, mergers and acquisitions, and IPO, right? And market makers, which provide liquidity or connect buyers and sellers to make the market, is not investment management but investment banking. So, this topic again is very important. You should understand the difference between investment managers who help the clients reach their investment goals by managing their money, and investment bankers who are hired by the companies and the governments to facilitate the financial transactions. All right. So the full-time investment banking services are what? Underwriting, mergers and acquisition, sales and trading, equity research, and asset management. Clear? Why only two is correct? Why only option B is correct? Clear? Okay. So option B is the correct answer. Next, what is the role of the middle office in an investment bank? So the investment bank is divided, or the organizational structure is split up into three main offices. We have the front office, the middle office, and the back office. One of these three deals directly with the companies. Another office tries to manage the risk. And the third type of office, what they do, they perform the supporting activities. So the question is asking us, what is the role of the middle office of an investment bank? It generates revenue through direct client interactions. It manages the risk and ensure the regulatory compliance, provides technology support, handling operations like account management and settlement. So what is the role of the middle office? First you answer, then I will explain all the three offices, the roles of all the three offices. Yes, what is the role of the middle office? D. Handling operations like account management and settlement. No, D is not correct. So the correct answer, let me tell you now, is option B, that is managing risk and ensuring regulatory compliance. Front office deals with generating revenue for the investment bank. There's investment banking, sales and trading, and research. It comes up with various research reports of the firms and industry. That is the front office. It is dealing directly with the client. All right. Then the middle office main function is to check that the investment bank don't engage in activities that can be detrimental to the bank's health. So they're trying to manage the risk, financial control, corporate treasury, corporate strategy, and compliance. All right. So they will check that the investment bank is not involving in too much risk. That is the role of the middle office. Then the back office basically provides supporting activities like operations and technology. Operations and technology. All right. Now, is it clear? Option B, managing risk and ensuring the regulatory compliance. Generating revenue, front office. Providing technology, front office. Handling operations like account management and settlement can also be a support activity. So, again, not the front, it will be the back office. Providing technology support is back office, and handling the accounts will also be the function of the back office. Clear? Great. Next question. For the financial year 2021-22, which of the following is true? So here you should know the difference between financial year, assessment year, and the previous year. Now, one thing that I would make it clear again, even though you have the new budget of 2025 or for the financial year 2023-24, but still we will focus only what is given in our syllabus. We will follow the edition 2023 of the Macmillan book, and we will not worry about the budget 2025. All right. So the tax slabs that are given in our syllabus, we will study that. Okay. So for the financial year 2021-22, which of the following is correct? The tax return for the year are filed in the assessment year 2021? No. The income of financial year 2021-22 is assessed in the assessment year 22-23. The financial year starts on 1st January. Absolutely incorrect. And the income tax rules will differ. Again, incorrect. So, yes, all your answers are correct. Option B. So, financial year is the year in which we earn the income. Assessment year is the year in which we assess the income, the total income, and we file our taxes, the income tax returns. And previous year is nothing but another nickname for the financial year. All right. And the budget 2025 has done away with these confusing terms. Only one term will be used, the tax year. All right. So for the financial year 2021-2022, the income will be assessed in the 2022-23. Option B. Next. For whom is the new tax regime particularly beneficial? So when we are comparing the old tax regime versus the new tax regime, what is the difference? In the old tax regime, there are less tax slabs and higher tax rates are paid. In the new tax regime, there are more tax slabs and lower tax rates are there. However, in the old tax regime, you can get more deductions and more exemptions by investing in certain types of avenues like insurance or mutual funds or other securities. But in the new tax, you will pay low taxes. However, you will not get the benefit of these claims. The deductions are not allowed here. So, for whom is the new tax regime particularly beneficial? Statement A, middle class taxpayers with taxable income up to rupees 15 lakh, high income earners with significant investment in the tax saving schemes, taxpayers who make low investments and do not claim many deductions, business owners who frequently change their investment strategies. Yes, so the new tax regime will be beneficial for which class of individuals? How can it be beneficial for both middle class taxpayers and high income? Both 1 and 2 cannot be correct, right? Either for the middle class or for the high income, it will be correct. It will be appropriate. Okay. So the correct answer is not D. The correct, sorry, it is not A. The correct answer is D. That is 1 and 3. Like I told you, you will have to pay less taxes, lower tax rates. So it is beneficial for the middle class taxpayers and who make low investments and don't claim for many deductions. Yes, option D. 1 and 3 is correct. High income earners will go for the tax saving schemes who make significant investment there. They will go for the old tax regime, and the individuals who do not make many contributions to the investments, to the tax saving schemes, will go for the new tax regime. All right, clear now? Okay. So, which deductions are allowed in the new tax regime? Which deductions are not allowed in the new tax regimes? Again, very important. You should know in which venues we can invest for claiming the various deductions in the Income Tax Act, like the Section 80C. We can invest in the PPF, the ULIPs, the EPF, mutual fund, ELSS, life insurance premium. 80 triple C is there, then 80D is there, all of these things. All right. But this is available only in the old tax regime. Next, how should banks handle investors' applications for the purchase or sale of mutual fund units? So now we are talking about when the banks they offer the third party products. Banks they offer mutual fund or the insurance products. They can undertake these activities either through the joint venture or subsidiary, or they can do the activity departmentally as well, but without risk participation. All of these are there in the RBI guidelines. Again, a very important topic has been asked in almost all the exam cycles. So, how should the banks handle the applications for the purchase or sale of mutual funds? Can the banks invest directly in mutual funds on behalf of customers? Or should they forward the applications to the mutual funds registrars or the transfer agents? Can they purchase the mutual fund units from the secondary market? Or they can offer credit facilities to the customers for purchasing the mutual fund units. How do the banks offer mutual fund product to the customers? Yes, the correct answer is option B. Absolutely. So there are RBI guidelines regarding this that banks cannot take mutual fund business with risk participation except through a subsidiary or joint venture, right? They can act as the brokers or agents. However, there are certain conditions that the investors' applications will be forwarded. The purchase of units will be at the customer's risk without bank guaranteeing any assured return. The mutual fund units cannot be bought back. All right. And when a bank is holding custody of the mutual fund units on behalf of the customers, they will keep these investments separate from their own investments. All right. So these are the RBI guidelines. Next, what are the prerequisites for a bank to act as insurance broker departmentally? Insurance products also the banks can offer either with risk participation through a joint venture or a subsidy, or bank can undertake the insurance broking or corporate agency by setting up a subsidiary or joint venture, or they can also provide the insurance broking services departmentally. So here the question asks us when the insurance broking services is undertaken by the bank departmentally, what will they do? The bank must have a board approved policy for insurance distribution. The bank must secure a license from the Insurance Regulatory and Development Authority. The bank must maintain a deposit of rupees 50 lakh with IRDA. The bank must provide a minimum guaranteed return on the insurance product. Yes, very simple question, but this has been asked in the October exam. You can easily answer this. What will be the correct answer? 1, 2, and 3, 2, 3, and 4, 1, 3, and 4, or 2 and 3. Yes, we have already gotten the correct answer. It is option A, 1, 2, and 3. No, not B, A. Yes. So, when through a joint venture with risk participation, banks will have to maintain a net worth of rupees 1000 crore. They will make sure that the NPA is not more than 3%. They are making a profit in the preceding 3 financial year. Same if the bank want to undertake the broking services through a joint venture or subsidiary, just that they have to maintain the net worth of rupees 500 crore, right? And when they are undertaking the activity departmentally, they are acting as the brokers or corporate agencies or agents. They need not maintain, or there's no provision of the net capital, but they have to keep a deposit. That is, they will first apply for a license with IRDA. At that time, they will, along with the application, they will pay a non-refundable deposit of rupees 50 lakh. No, the correct answer is not C, it is A. Why? Because banks will not provide a guaranteed return at any cost. Bank will tell the customers that you are investing or you are purchasing the insurance product and I'm not providing you any guaranteed return. All right. So the correct answer is option A. And that is all for today. So, apart from this, also many important topics were asked in the October cycle. I will come up with more sessions like this. We'll be discussing the topics that have been asked in the other cycles, in the May cycle, in the 2023 cycles as well, so that you get an idea about all of these important topics. All right. And here's an information for you. The all-in-one combo, that is a crash and cracker batch for the May 2025 cycle, has already started. And you can join the batch where you will get the revision, plus we will discuss the MCQs as well. Or you can simply join the Super Elite plan, which is the all-in-one plan. And for this, you can use the code SPL. This is the Ramadan month special, and you will get 51% off on your subscription. Thank you so much. That is all for today. Very soon, we will be discussing the topics and questions from the other exam cycles as well. So make sure that you like the video, you share the video, and you subscribe to the channel so that you do not miss any of these sessions. Thank you so much for participating. I will see you again in other sessions, and all the best. Thank you.